Hello again, this is Alex with MasterChartsTrading.com. This is market recap for Friday, March 6, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Your likes, support, and shares is what keeps this channel going. Thank you very much for your support. I think the world is on the brink. Uh, Bears are salivating. The central banks are gonna do all kinds of interesting monetary policies. Federal Reserve has already lowered the interest rates, and this is similar processes happening around the world. I want to share a technique that I used this week to successfully trade E-mini futures, but using a retail ETF, a triple leveraged bearish ETF. So I'll show you an hourly chart trade. I think the small caps and the Dow Jones are actually outright in a bear market, and S&P is very close. Several sectors and very important industry group, financials, industrial materials, and transports, I think are in a bear market. And the same goes for all world except the United States, VEU and VGK. We'll look at a couple of stocks, companies that are working on the cure for the coronavirus. So Gilead and Regeneron stocks. Uh, Junk bonds may have already entered the bear market, so this is a bad sign in general. And I'll see if I'll show you what I mean there. Treasuries just took off all-time record highs. We will look at the yield curve again as it was saved once again from the inversion by the by the Federal Reserve intervention as they cut the interest rate. Oil was collapsing and it was predicted. Uh, Dollar is breaking higher and is helping gold and silver. And we'll do an update on our crypto robot trader. We're going to start accepting clients' money relatively soon. I'm hoping within a couple of months. To do that, you will need to register a Kraken account, and later on, when you're ready, send us a API credentials. It has not been, it's not yet happening, but you can sign up for the Kraken account now so that when it goes live, you won't have to wait. All right, let's look at our proxy for the market, S&P 500 ETF SPY. So I'm going to zoom in on the recent price action, and up to very recently, uh, there was no question about the chart being bullish, uh, but we had a big drop, so nice big drop here. Attempt to rally above the blue line. So I wanted to share what are these lines here. So the green, blue, red, and yellow lines are my custom proprietary indicators called Master Charts Trading. You can find them on TradingView.com. All you have to do is first sign up on my site, MasterChartsTrading.com, for those indicators, and then once you signed up, send me a user ID for TradingView and I will open the door for you so you can have the same lines on this chart for your chart as well, on your chart rather. So looking at this chart, I use my lines pretty much exclusively to trade, and they help me to find good support and resistance levels. And you can clearly see this resistance level right there where I'm hovering, 3rd of March. There was literally a touch of the blue line and then a fallback. So right this instant, we can see that the price went below the red line. So this is caution. Caution doesn't yet mean it's the end of this particular bull run for this particular ETF, but it's getting very close. You can see how close we are from the yellow line. If we close below the yellow line, currently at 284, then I think this is it, and S&P 500 is in a bear market, and by extension, the world is in a bear market. So Not yet, it hasn't yet happened, but it's getting very close. So in the next chart, I wanted to show how to trade futures. So S&P 500 futures, and this is hourly chart. So you will need um, either a special account. I mean, right now there are also e-micro futures. So these are e-mini futures. There are also e-micro futures. So that's another option if you're interested in trading. But if you don't want to bother with that, opening a new account and all that, you can actually trade using my indicators on hourly charts. These are hourly charts. So each candlestick is 1 hour worth of activity. In fact, this is what I did. You can kind of see, I'm going to zoom in. So on an hourly chart here on the 5th of March at 8 in the morning, I went ahead and I shorted it. How did I short it? Now, I bought calls for a security called SPXL, which is 3 times bear S&P 500. In other words, if S&P 500 goes down, the SPXL would go up. Now, I don't want to analyze, triple leveraged inverse ETFs, so I analyze the underlying. And in this case, underlying is S&P 500 itself. So what happened is here on the 5th of March 2020 at 8 in the morning, I'm like, this is looking really beautiful. I think I'm gonna short it. So how did I short it? I bought calls. I bought 20th of March calls. See, you can see they're very close expiration for SPXL. So in other words, not only SPXL is triple leveraged, the option also, how if you trade options, the options move a lot. And in this case, it moved huge. So I bought calls here at 40 cents each. And literally a couple hours later, I'm looking at my calls and they're up, 70, almost 75%. Uh, so I'm like, yeah, it's getting close to the end of the day. I don't want to keep it overnight. I only have one option, one call. I only bought one call just to try it out. Uh, and I want to, might as well try and just close the position. So I went ahead and I closed the position. So this is how I did it. I bought call options, but I analyzed the underlying S&P 500 itself. You can see it's a continuous instrument. If you try to analyze S&P 500 ETF SPY, you can see there are gaps between the, opening gaps, etc. But if we analyze the underlying itself, then there are no gaps, and we can trade using options. Uh, you know, in this case, I want to see the drop, so I bought calls on a bearish ETF. If that makes any sense, let me know. If that doesn't make any sense, also let me know. I'd love to help you out, guys. All right, so let's continue to the next uh, security, and we'll look at QQQ, the Nasdaq 100 ETF. This is one of the strongest charts right now. So from the record highs, price came down towards the blue line. So this is my trigger when S&P, or rather when a security dips below the blue line and then closes above the blue line. This is my um, trigger to buy. So I didn't really send any alerts out. This was more of a kind of, if you're more adventurous and you're willing to take bigger risk, then this would have been a trade for you. But right this instant, you can see that actually the price dropped, and perhaps it was a good thing I didn't buy it. Dow Jones is, I think, in a bear market. Uh, you can see the breakdown right there on the 28th of February. It closed below the yellow line. So in this, in my book, this is just a bearish security now. What complicates things is the fact that S&P 500 has not yet joined the bear market, and Dow Jones has. So I want to wait for S&P to make a move, and then we can, if the S&P 500 closes below the yellow line, then we can start shorting, considering shorts. IWM small caps, a new low for the move. Bear market for IWM started here on 28th of February. You can see a close below the yellow line. So this means, uh, basically avoid and possibly, close at a loss even. I'm just run away from this. Uh, I didn't have I didn't have too many losses because, I trailed my stops pretty tightly. But right this instant, I literally have no stocks. All the stocks got stopped out. I have some gold related and like Ethereum, but other than that, I own no stocks whatsoever. Some of the sectors that collapsed into a bear market is, for example, XLI, industrials. This is a very important sector, and we should be uh, absolutely paying attention to it. So right this instant, industrial sector is in a bear market. You can see a new low and a close below the yellow. So if you're more adventurous, then let's say and wait until it bounce towards the red line, and I would short it there. Same goes for financials. You can see financials broke down below the yellow line, closed below the yellow line. This is again a bear market. XLB basic materials also broke down. This one broke down actually early on 27th of February, and that's it. I would be basically waiting to short it. Transportation, even earlier, 26th of February, transports uh, just broke down and never looked back. I mean, this is a big move. So big move and important sectors. Uh, Industrials, financials, transportation, and uh, basic materials. They are well, basic materials is not very important, but the other two, the industrials and the financials, are extremely important to the health of the stock market. So together with the transportation and the bear market, it looks kind of bad actually. So overall, this is painting a picture which is closer and closer to the general bear market. Vanguard uh, total all world except United States ETF VEU. You can see a close below the yellow line. Once again, this is a bearish development. I would avoid it. And this is not a good sign because it represents the entire world. And here's European equities VGK. Same goes for European equities. You can see a close below the yellow. So overall, a bearish development. So I wanted to highlight some of the uh, firms which have been, working in the coronavirus arena. Gilead has a drug out that was tried for Ebola, and I mean, what I understand, it doesn't really hold that much promise, but I think they're trying to see if it even works. So there's a study going on. Uh, Gilead, you can see a big rally, 20% rally. I mean, there's lots of volatility, but that doesn't mean that you cannot play it. So, for example, if you entered right there on 6th of February and set through this craziness, then you would be up to 20% up. And another one that's working on the coronavirus cure is the Regeneron Pharmaceuticals. You can see a couple of opportunities where the arrows are. The latest opportunity on 6th of February would have resulted in a very nice gain around, let me see, also about almost 30% gain. So the way I trade with my indicators is just very simple. When the price closes above the blue line, this is what I buy. Junk bonds. So junk bonds is one of the most worrisome uh, charts that I see right now. You can see a close below the yellow line for this particular ETF, JNK. Now, if we look at HYG, it's another junk bond ETF. You can see that it actually closed above the yellow line. So I want to give the bulls the benefit of a doubt and avoid, you know, calling premature bear markets. For example, junk bonds JNK has closed below the yellow, but HYG hasn't. So go figure. And TLT skyrocketed to a new record high, new all-time record high. Latest alert produced 20% move in our favor. So again, congratulations if you open. Now, this is causing yield curve fluctuations. So let's look at what was happening to the yield curve just recently. And okay, so let me look at the dynamic yield curve. Okay, okay, so right now the curve looks normal. You can see the 3 months yield is well below the 30-year yield. Just a few days back, I'm going to backtrack a couple of days. You can see the curve moving, and there's like just a severe inversion right there on 28th of February. So notice where my marker is right now, where I'm hovering. I'm going to advance forward. So notice that the yield is on the 3 months yield was like around there. And I'm going to advance forward a few days. So you can see that if the Federal Reserve did not lower the rate, then today we would have had an inverted yield curve because the yield curve originally was like there. You see? And if we fast forward a few days, you can see that we would have had an inverted yield curve. So why do I care? Inverted yield curves in the past have led to bear markets, or at least inverted yield curve event. So here's one that happened in 2007, and then another one that happened in year 2000. Is it going to happen now? The central banks are extremely aggressive with liquidity and, basically throwing money out of the helicopters. So with this huge move for TLT, uh, negative interest rates could be very soon here. What does that mean? That means you will be paying the government to hold for the privilege to hold their debt. Uh, but if you have a mortgage, I read in some countries they actually pay you money to hold the mortgage. Go figure. Weird, right? So this is the results of various interventions that we're seeing. Uh, they're playing with the interest rates. They're going to most likely start another round of quantitative easing. Most likely it will be coordinated with Bank of Japan, European Central Bank, and United States Federal Reserve. Um, I don't think, well, we'll see how it goes, but the way things are going, I think they're gonna start printing more money, basically. Oil collapsed to a new low for the move. So if you shorted oil back on, excuse me, back on 23rd of January, then you would have had about 25% move in your favor. How do you like that? Uh, Most likely has to do with excessive supplies and not enough demand. Coronavirus is here, so people are not driving as much, and transportation is also suffering. So it makes sense that the oil is dropping. And of course, the dollar index, another whipsaw. You can see a big drop. Uh, so now we're playing dollar on the downside. In other words, we're shorting the dollar with various instruments like euro, British pound. Overall, this is helping gold. Gold just hit a new record for the move. I think this is like a 7 or 8 year record. Uh, it again makes sense because if the central banks are printing money, quote unquote, then money has to go somewhere, and this is creating inflationary pressures. So gold is a hedge against inflation, and it is going higher. Makes perfect sense. Okay, very brief update on our robot. Um, Crypto robot, we have a crypto robot that's trading on our behalf. This is today's screenshot. You can see March 6 at 7 p.m. So about an hour ago. Not really much change. This is equity curve, or rather return on investment. So uh, we started in sometime mid-December of last year, and since then it made about as much as 17%, but more likely around 15%. So we're extremely satisfied with the robot. The robot is trading right this instant on Binance. It is trading on hourly charts. It is trading 5 different cryptocurrencies automatically. So we are not interfering with the robot, and it's doing it so automatically, and it's generating very nice cash flow. So what I want to do is I want to give you guys heads up. If you are interested, we will soon begin accepting people's money. Uh, it hasn't yet occurred, but if you are interested, sign up on Kraken, Kraken, .com. This is an exchange. Get your account approved, fund your account, and then eventually, hopefully in about 1 or 2 months, we will begin uh, trading on the behalf of clients using our API, using crypto robot trading. So it is coming uh, very soon. So I would recommend you at the very least sign up for Kraken so you get ready, but also don't forget to go to MasterChartsTrading.com, click on sign up, and then go over to the algo trading part and enter your email here. So this is um, basically a interest list forming. So do sign up for that. We have currently still 3 services: alerts, trading indicators, and both alerts and trading indicators. This will change somewhat for the better. Prices hopefully will stay about the same for about the same amount of service, but we will have more add-ons. For example, ability to choose which stocks you want us to monitor and receive alerts about. But even right now, you can sign up for trading indicators and for alerts. If you're ready to trade on your own, sign up for trading indicators. Once you sign up, I will open the door for you, and you will be able to use my indicators on TradingView.com. This is available for TradingView.com, this interface where I'm hovering right now. And of course, my newsletter, also known as alerts, also are available for you. So sign up now, and if you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye bye.